Welcome to this webinar recording on finding options for starting a business. We will explore the various ways to finance your entrepreneur journey. My name is Anastasia Hale, and I'm a franchise consultant with FranEnd. It is important to understand the different funding options available to you. I am pleased to introduce our presenter, Christine Hansen from Fran Fund. Christine is an expert in business finance with years of experience in guiding entrepreneurs through the complexities of finding their ventures. I am excited to introduce Christine, who will lead us through today's topic.
Thank you, Anastasia. My name is Christine Hansen, and I'm a senior funding consultant with Fran Fund. I have spent almost a decade in the franchise industry, and I love helping people by being their go-to educational resource when it comes to funding options for business ownership. One of the questions that you might ask yourself when exploring entrepreneurship is, how am I going to fund my business? Well, today's presentation will cover the most popular funding options for you to consider. So whether you're thinking about starting up a new business or franchise or purchasing a business for sale, these options may apply to you as well. Some of these ideas you may or may not be aware of, but they typically fall into four main categories listed here. The first category is equity funding. This is a situation where you are bringing in a partner or investors that provide you with the capital for a business to start up in exchange for ownership equity. Then there's also asset-backed funding, which includes equipment leasing if you have a business that has a need for equipment, or maybe you have non-retirement funds like a portfolio or securities, and you can get a line of credit against those account investments as well. There's also debt funding, another common funding strategy that includes borrowing money. Maybe you borrow the equity from your home, such as a home equity line of credit, or you refinance your mortgage. This also includes bank loans, including SBA loans, which is a popular strategy that we will get into more detail in today's presentation. The last category is self-funding. Cash is an obvious option, whether you want to use your own savings to fund the business, but there's another option that you may or may not be aware of that is an IRS program that would allow you to access retirement funds to invest into a business that we will touch on during our first deep dive here. Here at Fran Fund, we call this program the Fran Plan, but the formal name is the Rollover for Business Startup Program, also known as ROBS or ROBS. This program is governed by the IRS and Department of Labor and has been a part of the Internal Revenue Code since 1974. So this is not something that Fran Fund or other organizations have created to get around any rules or regulations. But what this strategy allows you to do is access money that you have from, say, a 401k from a previous employer, or maybe you worked for a nonprofit and you have a 403b. Maybe you rolled over your retirement funds into a traditional IRA, or maybe you're a veteran and have a thrift savings plan. And for this ROBS program, we actually honor a veteran discount as well. But what this program does allow you to do is access these funds and invest them directly into your business without having to pay any income tax or early withdrawal penalty for touching these funds. So folks do ask, well, how does this ROBS Rollover for Business Startup program compared to just taking out a distribution or withdrawing the funds that I need from my retirement account? Well, as you can see here, we have used a simple illustration where we are starting out with $150,000 in a retirement plan. When you use this program, because there's no early withdrawal penalty or income taxes associated with this program, you would ultimately get access to the full $150,000. Now, on the other end of the slide here, if you were to take out a distribution, which is a withdrawal from your retirement plan, and if you're under the age of 59 and a half, there would be an early withdrawal penalty of 10%. And then for this example, we assumed a 30% tax bracket. So if you just took out a distribution, you will only end up with $90,000 available versus the full $150,000 if you were to do the ROBS funding strategy. So you're probably wondering, well, how does this program work? And we're going to talk through it by a step-by-step process from beginning to end. The first step would be for FranFund to create a C corporation, and this C corporation becomes your new operating entity for your new business. Once that C corporation is in place, step 2 is for us to create a new retirement plan. And this new plan will be sponsored by your C corporation, which again is your new business. Step 3 is rolling over your retirement funds from the existing plan that it's sitting in into this new plan that FranFund has created for you. Now, step 4, instead of using those funds to buy stock into Apple or Amazon stock, you're having this plan use the funds to purchase stock into the C corporation, which so happens to be your new business or franchise. So when all is said and done, the new plan will own stock into the C corporation, and the C corporation now has the cash to be used for any legitimate business expenses along the way. Now, when you follow the trail of funds for this funding strategy, these funds will be funded in your business bank account and not your personal bank account. That's why you're not paying income taxes or early withdrawal penalties. You are still making a qualified retirement investment through this funding strategy, and you are just investing these funds in the stock of your own business versus putting the money out in the market like you're used to doing today. Some of the major benefits of using the ROBS program is that you're not creating any debt. You're not borrowing from your retirement funds, so there will be no loan payments to make. There's no interest rates. And without those monthly payments, you do have the opportunity to cash flow sooner. And because these are retirement funds that you have saved, there's no loan application or approval process, and your credit score is not going to be a factor. This is truly your decision to make. Now, if you're in a position where you're considering on borrowing money and utilizing a small business loan in addition to utilizing your retirement funds, that combination strategy is very common and acceptable to getting you to the total amount that you need to fund your new business. Now, the next topic I would like to cover is getting you all up to speed on today's business loan environment and what that looks like today. One of the things that is important to understand is that when banks are writing loans to small businesses, they are exclusive to SBA loans. And the reason being is because from a structural perspective, the money itself comes from traditional banks and lending institutions. So when you hear individuals talk about SBA loans, this does not mean that the federal government is writing loans to startup businesses. The loan will actually be put directly in the name of your business, and then they will require for you to sign a personal guarantee. And that personal guarantee is going to state that no matter what happens to the business, it will be your responsibility to step in and ensure that those monthly payments are made on time until the loan is paid off. What will then happen is the SBA, the Small Business Administration, will sign a secondary guarantee for the bank. What that SBA guarantee says is that if we ever find ourselves in a worst case scenario, and it's impossible for the business to repay the loan, and it's impossible for you as the guarantor of the loan to make those loan payments that you're committed to doing, then the Small Business Administration will step in and relieve the bank of a large chunk of that money back. This is the reason why you commonly hear individuals mention SBA lending when they talk about small business loans today, is because majority of the banks that are funding these small businesses are very dependent on the guarantee that they get from the Small Business Administration. Now, when it comes to the use of SBA loans, it can be used to start up a new business or franchise. Maybe it's a business that's for sale. Maybe you want to expand your business, or you have an existing business that you need an SBA loan to use for working capital. When it comes to these loan amounts, they can go up to $5 million in value. And we're finding today that most banks out there, the minimum loan amount that they will fund is $100,000 or more. Now, here at FranFund, what we can do is provide you the support and exposure to the extensive network of the top SBA banks across the country who are small business and franchise friendly. Another common question that we get is, well, what is it going to take for me to pre-qualify for an SBA loan? And we have broken it up into 4 main categories here. The first category is credit. Typically, SBA banks will need to see a credit score of at least 680 and above, with no recent bankruptcies, foreclosures, short sales. And if that is on your record because life does happen, banks do prefer that that event is 7 years old or more and that you've had favorable credit history since that event. The next qualification is an equity, or some folks call it a cash injection. This is putting your own skin in the game, some of your own funds towards the project, and then the bank will fund the remainder of the project as well through the loan. You'll typically find that the cash injection range is 10 to 30%. And then, as mentioned, the remainder can be funded through that small business loan. The next qualification is the topic of collateral. So banks will place a universal lien on all business assets. And even if the business doesn't have many hard assets, they're still going to have this lien in place. And if your business loan is a $500,000 or more in loan amount, today banks may want to add some additional security from you as a borrower through a personal asset. And this can be fulfilled through either putting a lien secondary to a mortgage. Worst case scenario, if there was a default on that loan and you sold that property in the future, then those proceeds would need to go towards paying that SBA loan back. Or they may want to put an assignment on a life insurance policy or mutual fund account. So when it comes to collateral, whether that's through your business or personal assets, it really does depend on the loan amount itself and the situation. Now, the last qualification is something called burn rate. So banks are conservative in nature. And in order to satisfy their conservative nature, one of the things that they'll want to understand is that in that unlikely event that you did have to step in and cover either your loan payments or your personal living expenses during your first 12 months as a business owner, that you did have other resources beyond the business just in case. And it could be combined resources like reserves, extra cash on hand. Maybe either yourself or a spouse plan on keeping some W-2 outside income while you get your business up and running. So those are the main requirements that we're seeing for small business loans today. And I know this is not on the screen, but a lot of folks do ask what the interest rates and terms are for these loans. And what you'll find, it is a standard calculation that banks are utilizing. And that calculation to calculate interest rates is based on what today's Wall Street Journal prime rate is today, plus a bank's internal bank rate. And then typically they will fall into a 10-year term with no prepayment penalty. Another question we do get is, how long is it going to take for me to get funded through a small business loan? And as you can see, it's a pretty wide range here. Now, if you're looking at a business that is brick and mortar, which means that you're going to have to find a location and convert that lease space into that business model, and there may be some construction involved. So how SBA loans work is that the banks do not close on the loan or release any of the money until you're ready to start that construction. And that first disbursement of your loan will go to your general contractor. So if it does take you some time to find that right location or negotiate your lease, then you definitely may be on the longer time frame here on when it comes to timing. But if you're looking for a more service or home-based business where you're taking your services to customers, then you may be on the lower end of this time frame. But of course, things like the business type, contractors, the state you live in, all of those factors can in fact impact the timing. Now, before making any big decisions or commitments, just like when you purchased your home, it's really important that you get pre-approved for financing, or you talk to some of the professionals that are out there when it comes to the various paths for funding that make sense for you and your situation, so you can fulfill your dreams of business ownership. Now, what I'm going to do is now turn it back to Anastasia to take it away.
Christian, thank you for sharing your knowledge with us today. To everyone listening, I hope you found this webinar insightful. and that it has equipped you with the necessary information to make informed decisions. If you have any questions or would like to explore specific funding opportunities, please reach out to me directly, and I'll be happy to connect you with the right resources. Thank you for your time.